Good afternoon, everyone. I'm Charles Payne. This is Making Money. In the meantime, from the market's perspective, it's a huge day. The market higher today. This, ironically, with an assist from some worrisome developments. All right, the CPI number, it came in today. Let's just say it was mostly in line, although there's always something to quibble about. That dreaded inflation shock that was promised in April still hasn't materialized. Meanwhile, initial jobless claims, that's the real story today. See that big bar at the end? That big spike, 263,000. The consensus was 234,000. So that is your biggest economic news in the morning. Continuing claims edged a little bit lower. It's a good sign, but there's no denying the labor market is in trouble. And of course, the labor market is back in focus with Jay Powell after that Jackson Hole pivot. The shocking jobs revision, of course, we talk about that. Think about this, your last three revisions now, 2.5 million fewer jobs from March of 2023 to 25. Okay, that's what we thought we had. This is reality. This raises the question of rates with rate cuts, with the street pricing in 25 basis point cuts for the remainder of the year. Although you're getting a lot now betting maybe, just maybe, we'll have a 50 basis point cut in September. All right, so the bottom line here is that Jay Powell, right, this is his last shot. He talked about his legacy a lot. We've talked about his legacy a lot. Remember, he was gaining popularity, folks. When he took the job, he was actually becoming more popular than Yellen and Bernanke. Then, of course, they botched it, right? The infamous now transitory inflation. But with lost faith in Powell and the Fed, some people are saying it's just the system itself, that maybe it's just faulty. The reporting, the data, all of this stuff. Either way, it feels like danger is closer to the economy than Powell will admit, and certainly that Powell has acted upon.